The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. We're looking at the Dow down 125. Remember, this is the... Let me just show you this. Almost forgot about it. Here we go. It's this pattern here. So, and thank you to all those who attended last night's Boston Investors Group live webinar. Actually, it was, what did they call it? It was a Zoom meeting. And yeah, we covered a lot. So the pattern that I spoke about that was very important in Chapman wave methodology, straight up, straight down, cup formation, could be a V, but it's a cup formation going from one point down back to that point. How you treat that left side high is going to be important, and how you treat the left side low in the arch formation or the inverted V is very important. You can have a combination of 1 and 2. That's the green one here, positive, because if it takes out that left side high, it goes high, could go much higher. And on the left side, you've got 1 and 3 because it is, we call it the dreaded H pattern. Looks like an H. If you take out that left side low, it can go quite a bit higher, lower. All right, so with that said, where are we? We're looking actually, where are we? Let's just do this for 1 second. That's holding quite nicely there. Okay, good. So there's your H pattern that was successful in the 1 minute chart. We tested the 479 low, and now we're trying to rally a little bit in the E-mini 1 minute chart. You really need to see 4688, and then slowly move towards the 200 period moving average of 4691, because you definitely don't want to break under 4680 or 4679 support again, because that'll be very negative. That's in the E-mini. Let's just go back here. So what I was saying is, we shorted for subscribers using the 200% short within 40 or so points of the all-time high Monday a week ago as it popped up. We got stopped out with profits yesterday on that pop-up that was just a tad higher than I was expecting. I'm trying to get back in. The short side didn't manage yet. And what we're looking at is the reason why I even am talking short. This is just on the daily chart. I'm not talking about the weekly at all. Is that in this particular pattern, when there's a sharp move down, like I showed you in the dreaded H pattern, if there's a rollover and it occurs in leg A or B, but preferably if it occurs in leg, looking at it negatively in A, which I always term gray A, because in this case, it's way underneath the all-time high of 3565, 36,565. What we're looking at is, if at this particular A, there's a pullback sharp enough and it goes under something like the 14-period moving average, which it did fractionally today, now it's trying to rally. If there's a pullback and it takes out the left side low, in this case 35,915, and it does it decisively, it doesn't just bounce and then close above it, but it closes below it, and the next session it closes again below it. What you're talking about is finally that 9-period exponential moving average, which I spent some time on in the video meeting last night, is that 9 starts to become vulnerable as you see it turning down. And then there's a chance that it could go underneath the 14-period moving average. But what I said is probably the Dow would need to go to the 35,850, maybe even 35,700 for this 9 to close below the 14 to confirm a sell mode. Now this time I can just say it's a sell signal, but that's about it. The MACD is weak. The stochastic is very weak at 53%. The on-balance volume's been pulling back. You've got nothing but the 9 and 14 holding us so far, but that little doji candle at the PKF in the Chapman wave methodology gave me enough evidence to say now there's some vulnerability in the Dow, but all the different markets are showing various stages of activity at the highs. I'm not even going to discuss the weekly chart. We might have to wait until Friday before we can get there But look, the 120-minute chart has just made an arch formation. It's trying to find some support now. So the day is young, as I always say. The day is young. And until if you're looking at a 120-minute chart, that's one thing. But if you're looking at the daily chart, you have no choice but to wait for the close of the day, because to make a decision or make some kind of analysis as if the day close is very silly. Right now, in the throes of trying to find some kind of support, that 9 is still above the 14. To me, that says there's some internal strength. Watch that strength. This either dissipates or it strengthens further. Let's go to the S&P. I don't want to take too much time. There's so many stocks and stuff that we need to look at. Why did it not print? There it is. S&P went to 4718.50 all-time high. Friday a week ago, doji candle. Tiny little doji candle gives you a Chapman wave silent doji, which says be careful, you could start to pull back. Yes, we pulled back. Went under the 9 period, the green 9, didn't touch the 14. Then next day, touched the 9 again. And then since then, we've had 4 sessions, so far 4 sessions above the green line, the 9 EMA. MACD's just barely turned negative. Stochastic is still pretty good at 79%. On balance volume is pretty good. So we have a mixed market. And that's the whole thing about any form of a top. Remember, bottoms are made in unison. It doesn't matter where. March 23rd, everything just about made a bottom either there or within a day before, a day after. But tops can be sequential. Major tops are often sequential. Short-term tops, you can coincide, everyone's getting to a D or an E and they pull back. So at this particular point, you can see that the S&P 500, this is 500 stocks, down 9.5 at 46.91. Yesterday went all the way to 47.14. It came within 5 points of an all-time high. So I'm watching this very closely to say there's still residual strength. And I had said to get the 9 to close under the 14-period moving averages, no matter what the Chapman wave count is, no matter what Fibonacci's are, no matter what volume, I don't care what technique you use, to get that 9 to cross negative would take the S&P plunging to about the 46.14 level, 46.20. And it's at 46.91 right now. Let me just refine that a little bit. Yeah, 46 under 46.30. To get that to close, that doesn't mean other things can happen, but to get that 9 to actually cross negative, And look at this, the weekly chart holding very nicely, almost at the all-time highs. Leg B, I don't want to go through this again, but it is a leg B in the there we go, a leg B in the monthly chart. Nothing to say other than you cannot get a major top, at least in my work, until you get to at least a peak D. And we aren't even in a peak B, let alone a peak C or a peak D. So that's still very positive looking out, but doesn't mean to say you could even have a 400 or a 500 point decline in the S&P and still be in a buy mode. So don't think that everything's just great at this point. We're looking at some topping action. We have to deal with that, and then we have to see what happens in December for the next month again. QQQ, I think it's trying to come back a little bit. Yes, there it is, up 43 cents. That's 97. We'll be back in a moment. That's the appetite.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So I'm looking at, let me just move this away so I can get everything set up nicely. Get this microphone a little high. There we go. Okay. So Rivian just made a peak E in the 120-minute chart. First time in its life that it's ever done that. Not the Chapman wave methodology. I mean that it's made a peak E. And we're going to see if it pulls back from here. These things are somewhat overbought, almost all the EV stocks. So we're going to be following this really closely. Most importantly, we're looking at, just to give you an example of something that has been digesting huge gains, and that's Tesla, 1243.49 all-time high, made a 1217 round number low that day, and then 1208 round number low the next day. I always watch these round numbers. And now we've seen a tumble from 1243 to a low of 9. Let me just get this exactly right. 970 something. Yeah, 978.60. It's up actually at 1,084. I mean, let's face it, that's a pretty darn good rally. But what we are looking at is that I think that there's a digestive phase that's going on for Tesla, and that's going to be important. It allows some other stocks like LCID, Lucid, to rally, and there it is at a recovery high. All-time high was up in the 60s. Today, the high is 57.75. Leg F, I'm calling it an F. I could call it an alternative account, but everything about it, I need to keep it because the MACD hasn't crossed negative at all. It still means that I consider this to be a continuation of the alphabet A, B, C, D, E, F, and it could even go to G. Then I have to call it G/C. But in the meantime, doji candle potentially happening here. Just got to be real careful. So I'm kind of cautious right now. We had some of our positions make all-time highs yesterday. I wouldn't be surprised if they start to pull back a little bit, but I'm just saying, yeah, it's a LUCD. I love that. That's exactly what I did, Boss Dan and the Dead. I went, Lucid, what was the symbol again? Was it LUCD? And the next thing where did I type that? Oh, come on. LUCD. And the next thing I know is there's this thing rallying from $9 to $10.80. I thought, what's going on here? But in fact, it's a different company altogether. It is Lucid, diagnostics needs diagnostics right now because it's down 21%, down 2.22 at 8.24. I love the 222. I used to have a postbox 222. All right, so there it is. No, it's a different one altogether. And let's get back to what I wanted to talk about, which was yesterday, last night, I went through a whole bunch of things. I showed the retail index going to an all-time high, and that's the Van Eck Retail ETF. That's RTH up 61 cents at 196.54. But anyway I count this, I'm saying to myself, yep, the MACD strong, stochastics flat at 91%, on balance volumes fading miserably. The RSI, the relative strength index, is doing well. But how would it pull back? What would make it pull back? Why isn't this in the weekly chart a brand new B instead of what I'm calling it an F? Just for the moment. All I can say is, just on a visual basis, it's acted extremely well, but each percentage move above the 9 EMA has seen a pullback towards the 9 EMA, and that's at 192.86. We're at 196.48. So that's 4 points away, and it's making all-time highs. And I keep questioning, I keep saying, what is this 1 trillion and then another, 2 trillion or something of stimulus money needed when your 20% of this is Amazon? Okay, so I said, let's get out of that, and let's look at the other one, which is the XRT, which is the S&P. I wish I could just get this a little bit higher so it doesn't keep bumping my hand. So the XRT, what happened to the XRT? XRT, there it is, should be. There it is, okay. The XRT trading down $1.50. Hello, what's happening here? Format, XRT, close. There it is. Having made a new all-time high yesterday and this it's an equal weighting, so it has Amazon, but Amazon doesn't have that same distortion. And what we're looking at is 104.26 yesterday, and the high today is 104.31. So it's squeaked to a new high. And I'm saying this is a different pattern. This is the pattern that I like the best of all because it has equal weighting. And it's giving me a better sense of what I'm looking at in terms of the S&P retail sector. And it made the spectacular spike back in, what was that, in January, February? Yeah, the week of the 29th of January to 99.24. Then it pulls back quite sharply to 77 or 74, 74.38. And then it goes sideways, just like the Russell 2000 went sideways. And then just like the Russell breaking to a leg D in the weekly chart, this broke to a leg D. And what I had said last night is that it's telling me that we're starting to get a little bit toppy as we're going into the season, the most buying of a season. That is the Christmas, Hanukkah, we've got end of year, birthdays, everything that comes on in December. And it says, how will we treat the rest of the year going in from this third week of November into the last week of December? Let's call it 6-7 weeks. Well, the rule that I have for a narrow rectangle formation is the longer it stays there, regardless of whether if it's at a high, it pops above, the price pops above, it invariably comes back to retest. Sometimes when it breaks below, it still has to give a little retest. It's like, oh my God, I forgot to say goodbye to Johnny. Oh, I got to go back. And it pops up and says, goodbye, or I forgot my hat or my coat. And then it goes back down again. And in this particular case, you've got that pop to the upside. It's a weekly chart, so it's 3 weeks now. It's not Friday, it's Wednesday, but it's still the third week above the resistance level of that 99 high that was made back in January. And we popped up to, what did I say it was, 104.31 all-time high right now, even as it's pulled back to 102.65, today made an all-time high. I think it could be pulling back a little bit more. And then we'll see, how does this act as a support level? Does it become a 1-to-1 trigger to the upside like a propeller shaft? it's a little difficult to explain what I mean. I mean that this whole thing becomes the midpoint of fulcrum for a power to the 107 area, 106.80 to 107.30 area. We'll be watching this. I will be watching this very closely, because as I'm looking at a lot of stocks, peak E's and D's, E's and F's in the daily charts. We've got a leg E. I think we are kind of vulnerable in the shorter term to some kind of choppy downward action, but not yet do I see some kind of a crash scenario. But I definitely see the consolidation continuing, other than the sudden weekly spike to the upside in many indices, coming back into some kind of support area. So I spent a little time there just talking about that. Let's just even look at Target. What's Target doing today? Oh, just gapped down 12 at 254 at a peak G in the Chapman wave inside track resistance area. I'll be back in a moment.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. I had a couple of questions in the den. I'll try to answer them one at a time. BCLI, which is, what is that? Brainstorm cell therapy. Is that brainstorm? I don't know why. Brainstorm cell therapy. Yeah. BCLI, trading at $323.23, up 8 cents. The question is, as a longer-term investor, this is not for the faint of heart. People who just like to say, oh, great, let me see, what is that? Oh, let's buy. This you have to think through. Why? Because the weekly chart, this is the first time in a long time since August that it closed, that the weekly has a chance to close above the 14 period moving average, which is above the, right here, which is above the 9 period moving average, meaning that 9 is still very, very weak. So I'm going to say, look, at 323, if you're a longer term holder, I would just say be careful that the low of yesterday, around about 294-ish, 296, just if that gets taken out, it means you're going to bear a little bit of pain a little longer. But I like, on a short-term basis, I like the fact that the MACD is confirming, the stochastic's running nicely up at 70%. On balance volumes, a tad overbought on the daily, but certainly not on the weekly chart. The weekly MACD is held firmly a positive, funnily enough, even though the stochastic dropped sharply into the single digits and is now at 14%. So as a longer-term buy and hold, and I know that you use all sorts of strategies, whether it's options or whatever it is, there's only a $3.23 stock, but believe me, $3.23 going down to $2.90, that is, you've got yourself a sharp pullback there. So you got to be careful in that regard. But looking out, what I will say is that the 3 weeks that it's made since it's low in the weekly chart with higher highs and higher lows is the first decent positive we've seen since it had a really big move in percentage terms, going from about 290 something all the way to the high of $4.20. So I'm just going to say to you, I like what's happening now. It's probably a little bit early. It could even have a rally into the 340s and then suddenly take a dive. It has this characteristic. It's making lower highs and lower lows, but you want to see now higher highs and higher lows. So that's the presumption is that you're in for the longer term and that you have the patience to wait for it to make higher highs. But if it starts to turn around and over a period of going into Friday a week, it has started to make lower highs and lower lows. Just be careful. That's a pattern that can go on forever. But it's a biotech, and within that sector, you've done your homework. So all I can say is that if you are going to consider it a longer-term position, you want to see by about December the 9th to December, I would say even the 17th, somewhere in that mid-December range, it comfortably trading in the 360s or higher. Comfortably. That's on a weekly basis. And then it'll say, you know what? Things are improving. But it looks to me like a biotech stock. It needs news to carry it higher, and it needs news that sustains the move. And that's the whole thing about biotechs. Great trades, quick moves to the upside, but when they give back very sharply. That's all I'm saying. Okay. Next thing that we want to look at here is a question about, someone said target earnings. Yeah, target earnings must have been, I don't know, maybe it's the outlook and not so much the earnings, but this is what I was mentioning in last night's webinar. What I was saying is that there are, look at this. Let me show you. Look, Costco, all-time high as we speak. High of 530.74. It's at 525.41, down $1.46, just maybe in sympathy. But it's a leg D. Forget about the weekly chart, which is in leg G/B, and the monthly, which is in leg D. And look at this 120-minute chart. Peak A, B, C, D. A, B, C, D, and another one, a 120-minute chart. So thinking there couldn't be some kind of digestion phase, it's silly. There could easily be digestion, but this has been the sector that's on fire. You've still got the seasonality part of it, which is a positive. So we're looking at such selectivity in this market. It is uncanny, because if you're in the right sector, you're saying, wow, what a fabulous market. You could be in the wrong sector, like at IBB, the biotechs. Look at this, way down from even the most recent high in the 164 area down to 153, struggling. And that's what I'm saying, how select. Look at this, SLX. This is the steel sector. Big pullback, 68.42 in May, and now it's trading at 54, struggling. It will come on fire at some point, but not at the moment. And that's going to be a big deal. So now let me just do this 1 second. I want to switch over back to the, nice. Peak A, B, C, and now we're in leg D, and finally the 1 minute E-mini chart is acting well. It's going towards that 46.89 200 period exponential moving average. Nice. That's what you kind of wanted to see. Some support in some sectors. And let's go back now. I haven't finished all my work here. I wanted to just show you IWM struggling, acting very poorly. It's gone to a leg B in the downside. It's in a sell signal, about to give a sell mode daily, not the weekly. The weekly is still that peak D spike, which I say is probably going to come back into the 233 area. We'll see what happens there. Let's just do this quickly. SMHs. Now, this is going to be so important. It could be a non-event, but it could also be a really major event. Why? Because the semiconductor index made an all-time high of 305.95, and that was back, I think it was the Friday. So what was the date? That was on the 9th of, I think it was a Thursday, or somewhere around there. So this is November the 9th, and it pulls back sharply, and now it's had 1, 2, 3, 4, 5 sessions to climb higher. It was Wednesday, right? And then the weekly chart is in a G/C. If I treat this as an instant restart, which I do that to be as conservative as possible, leg F/C in the monthly chart, and the SMHs is gone to a leg E in the 120-minute chart. That is important because it made today 304.75, $1.25 within an all-time high. Right? This is the chip sector. But what if, and I'm just doing this as a what if, because I now know that even people that I know who are intimately involved in the semiconductor index for a year and a half didn't really have a clue as to what was going on. The only one that really gave me a sense of what was going on was when I asked Dave White, our technical guru here at TFNN, I asked Dave, what's going on in the semiconductors? The semiconductor index is going higher. I hear from automobile dealers, just anecdotally, that inventory is the lowest. They have no inventory. When cars come in, they go right out. They are pricing them the highest they ever have. They also have to pay a lot of money for the trade-ins. But there's a chip shortage in the auto industry. And then Dave White said, that's because they've always been cheap in the auto industry. They don't pay up for the right ones. And in fact, they need to upgrade to the new chips for the latest technology. And they aren't yet prepared to do it. They will do it. They'll have to do it. But at this particular point, that explains a lot. That it's very selective. I'll be back in a moment. Down 129. S&P's down 7.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Folks, we're back. So let me show you the in-video chart. Peak deep makes 323.10 on the 9th of November, pulls back, and then goes sideways, as if it's waiting, it's waiting, it's waiting. What is it waiting for? Well, they've been the leaders. They have evidently in the semiconductor area. It's one of the technologies. It's one of their attribute is that they add a tremendous amount in the field, and that's why they're leaders. But at the same time, what if they do this? What if they say earnings were just out of sight? But all they have to do is have one but, even if it's a small but. And what will happen is it'll maybe spike. Maybe it gets to 320. It's at 298 right now. Maybe it gets to 310, maybe 312. And if it holds, and for a day, that means all the way through Thursday after the announcement and the conference call, and it holds and it can close above 323.10, that is fantastic action, because it means it can hold it and make a high-level consolidation, even if it consolidates. But what if it either spikes higher overnight, and by 9:50 to 10 past 10 Eastern Time on Thursday, it's now negative? What if it goes below today's low so far, 296? What if it goes below that? Well, what it's saying then is, what if it starts talking about a potential chip glut or the outlook, but there's a little but that could create a little hiccup, at least in the shorter term. Yes, it's a leg. I'm a doji candle leg E. It means, my rule of thumb, we haven't closed on Friday, so I can't talk about this to this week's candle, but last week's candle makes it real simple. A close above the high of 323.10 on a weekly basis would be extremely good action. That means it's got Thursday and Friday to do it, because it then turns in the candle open and close of the week, and that makes it round about 301. Let's call it 302. Really good support on any spike to the upside that closes above the last week's candle. But if there is a close below the 287.74 low of last week in NVIDIA, that would suggest that that open and close doji candle round about right there, round about that 301, 302 area, becomes resistance, at least for a little while. So I'm going to be watching this closely. And if you're looking at Applied Materials, which the very next day comes out with earnings, it's the same thing. It had the same IWM and what were we looking at here that just spiked to the XRT, the retail index, the April the 5th, 146 round number high, to the 112-ish area slide. And then we went sideways all that time until 3 weeks ago when we spiked high. There's a little difference here because what we've done is we've had one candle strongly above that 146 resistance, followed by another candle very nicely last week, and this week has gone even higher. So it says that you've actually, in Applied Materials, created a higher support level than something like the XRT. I'm only talking channels, sideways channel, which is what I call the rectangle, narrow rectangle. And if you go back to the IWM, look what happened. IWM went on like that for a long time, from May 234 down to 207 within 2 weeks, and then traded in a narrow band all that time until it made this leg D to the upside, and now it's trying to come back. So I'm saying this is the pattern I'm familiar with because trading the E-minis constantly. This is what you see over and over again, what happens with a narrow channel. That's why for my webinars I've included the narrow channel, just the methodology. So we'll see. This is very different to Applied Materials. Look how high it went, and now it's the third week. So it says that Applied Materials, which made a high yesterday of 158, and I didn't even see that. 159 round number high. Oh boy, 59.00, and that doesn't mean that you have to. Oh my God, round number. That's the end of the world. What it says is when I start to see round numbers, it says that instrument is starting to see people, investors. I'm not sure they call investors at this particular time or whoever they are, fund managers, who are saying, look, I've had it. It's done so fantastically. Just sell at 159. I'm not going to bother with point whatever it is. Just 159 is wonderful. I got 159. I'm out. And it says now you got to start being careful because there are investors who have had such huge profits. They're just trying to get rid of their stock. It doesn't, a penny here or there doesn't make any difference because they've been in for a long time. And that says that if there is a sudden slide from that level, then that 159 level, 159, if there's no move above 159 in the next 3 sessions, but instead there's a sudden plunge to 150 or lower, it says watch out, that 159 has now become a repellent zone. All right, that's that. So we just let the market tell us we're going to be ready for whatever. I hope. So okay, within that context, I just wanted to go to the question I had was, so I'm not sure if this was just a private question. Usually you don't mind me answering it on air. So JEPI. This is JP Morgan Equity. I didn't have time to actually look into it deeper than this. This is I should have. Did I print it out? Did I print that out? No, I didn't print it out. Darn. So I'm going to try to find it. It was just a big question. As a dividend stock, it was introduced to me. I can't remember where he got in, but what about it? And I just wanted to say it's making a peak D just fractionally above the peak C that was high back in October in the 62s, pulls back, makes a high yesterday at leg D, and now it's a peak D with a low, round number 62. Today's high, and it opened at 62. It went to 62.21. Today it's under it at 61.80. I want you to do a little bit more work. You're in it, and you're talking about a dividend. It's got a fabulous, I think you said 8%. I get very nervous about dividends that are over and above anything that you can expect. But I do know people that have spoken to me about 10, 12, even someone had an 18% dividend stock in the gold area or something like that. I can't remember where it was, but I think it was in commodities. And that held it. And that person said to me, I've had it for 3 years, and I'm waiting for it to crack up and somebody to say it's impossible. But it's done everything I wanted. So I'm not going to put this down. This is JP Morgan Equity P. I don't know what the P stands for. I'm going to look up. But all I'm going to say to you is just watch it on a short-term basis, because if it closes in the next week below the low of the 8th of November of 61.80, if it closes under 61, I just be careful, because it's going to probably be pulling back. And the weekly chart says, whoops, arching over and fading. You want to see by Tuesday of this coming week, at least a test to maybe break out above yesterday's high. But I'll do a little bit of work on it and I'll come back. I'll be back. Dow's down 100. S&P's down 6.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
All right, got a few minutes to go. Here we go. Got a lot to do. Hi, Basil. I'm long Rivian, RIVN, at about 100. I know it was due for a pullback, but could it be that it is down so much today because options started trading on the stock today? If people sell the stock to buy calls or put on bull spreads, does that affect stock price upward? Yeah. So let me just do this. Rivian, I got as a peak E and is pulling back sharply. My theory with stocks like this is that every time you hop in, obviously you have to close your eyes and just buy it with a stop and let it rip. Take something off. Try to build a kitty in a stock like this. This is an IPO. It's brand new. You don't know what's going to happen. So it hit 100 and almost 80. I mean, that is unbelievable. 179.47. And now it's trading. A low today was 140. I mean, 40 something points. So all I'm saying is, yes, you're absolutely correct. It does impact it, but within 3 days it'll smooth itself out with the options and puts, and it'll do what it has to do. But congratulations on your 100-point entry, just like 5 points off its IPO low. Great. I would try, if it's possible, to keep that, and I'd have other trades. Treat it as a separate. One is now a core position, and have others, and we'll go. And tomorrow I'll do a little bit more work on this. Another question was, where did it go? Where did I write it? DOCN. Yeah, this is really a fantastic stock. Oh man, did I write that incorrectly? DOCN. Yeah, I love this stock, DigitalOcean. I looked it up. I can't remember if I spoke about it yesterday. I think it's a little toppy, but it's fantastic. It's just doing well. It's at 100 all-time high, 130.51. Now, yesterday was a little higher, and it's pulling back. Then the question is, surely QCOM, and I did a lot of work on QCOM. QCOM is telling us that NVIDIA is going to come out with fantastic earnings. Maybe so. I'm watching all of them. Let the market tell us. But QCOM is... Oh, I meant to talk about that yesterday, about the oldies becoming news. Did I do that? Anyway, I'll talk about it tomorrow. Look, Qualcomm's back in play again. Have a wonderful day. Stay